Good weekend. Ira Epstein of Linn & Associates with your SPDR ETF Weekend Edition. And this is for Friday, the 23rd of October, 2020. And what an interesting week it was. We finished off with the debate, as you know. And I don't think that last night's debate turned the needle for either of the candidates one way or the other. The president certainly wasn't his old self like on the first debate, and Mr. Biden did fine, I thought, until he started talking about oil and then say goodbye to Texas, Pennsylvania, and Oklahoma. I think he really did himself a number there. As for COVID, it's getting worse. As for COVID relief, I don't think it's going to happen. I think you'll get it after the election. It won't be easy to get it through on a lame duck Congress. You'll have to wait probably till the first of the year, which means more pain for a lot of people. But the debate just didn't seem to spur in the morning after anything of urgency as I see it from Ms. Pelosi, and she's running the show. It isn't Mr. Mnuchin, it's her. If she wanted to give ground, deals would happen. If she doesn't want to give ground, deals won't happen. You'll say, well, can the Republicans up theirs? The president could agree to all he wants. If it doesn't pass in the Senate, what good is it? So that's what he's caught with. She has control of the House, so she's running the show. That's my take on it. Now, the markets are starting now to price in the election in a different way. If you're reading stories, the cities, big cities across the country are going to start seeing their tenants board up again. It's happening in Chicago. The armies of lawyers are being hired because with this many already mailed in votes, we're 5 million more than we were in all of 2016, and the rush of them are yet to come. You got a lot more yet to come here. Well, the counts are going to be challenged, which ones you're throwing out. I mean, it's going to be a nightmare, and people wait for that, and these evil groups that go rioting in the street and looting, and you think that's protesting. Well, I know you don't, and I don't, but some people think that's a legit protest. That's called looting. It isn't protesting. And I think you got to get ready for more and an upheaval. I'm hearing in parts of the country, the toilet paper's already disappearing off the shelves again. People are going right back into that mode, so be aware of that. What we do on the weekly charts is this. They're all going to be of the weekly. They're not of the daily, so they're longer term in their nature. We'll take one and structure it, adding all the tools I let you see in these free videos. As you know, I do more in my subscriber videos, a lot more. So when looking at this, what do we have? Well, got a chart that has been in an uptrend. We had a good size correction, came up and got a small bump back down, but the pattern on the swing line is bearish. Why? You have a pattern of lower highs and lower lows. Now, for those of you that have taken my charting course, you know what I'm talking about. For those that haven't, a swing line looks at the prior week, and it decides from that, are you going to draw the line to this week's low or high? It's based on a set of 5 rules that I created. I've been using this for many years. I teach it completely in the charting course, and we make it available in our charting software. So when I look at it, it says for the moment at least, lower highs, lower lows is a downtrend. The setup is such that if this market were to take out 124.27, you could end up with higher lows and a higher high. That would reverse the pattern. Where are the key moving averages? Well, one of them is right here. This is the 18-week moving average of closes. Markets often go to that number to figure out what they want to do after they've had a run either to the upside or to the downside and come back and sort of stall out there and try to figure out what to do. You came down to it. You've had a 1-week correction with lower highs. But the bias of the market is determined by where price is in relation to that average. As long as price is over it, the bias is up. So while the trend is down on the swing line, it's 100% countered by the fact that the bias is up, so you have a big nothing at this point in time. In terms of resistance, my gosh, look at that upper Bollinger Band. It keeps offering the resistance. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Go on Investopedia, you can learn how it's formulated, what it does. A lot of different Traders, algorithms use it because it gives you an idea of a resistance point that enough people understand that makes a bit of sense. If you have a study and nobody follows it, it doesn't self-fulfill. It's just out there and, okay, maybe it's your magic and it can work. I don't know. But most people aren't that way. In other words, that they want to know what the other groups are going to be looking at. So the first time you get to Bollinger Bands, often that's a resistance point. First time you get down to them, that's going to be your support point. You can slip slide through them, especially on weekly charts, but you're in a zone that you got to pay attention to. At least that's what I think. You can do whatever you want. So I see support at the 18-week average. I see if you get over this number, you're bullish, but I have a problem with getting bullish. I'm right into the upper Bollinger Band. You're only going to stay over it 5% of the time. So that gives me a difficult hand to play. In terms of momentum, it's flat, just drifting here. So I have a market that's got the swing line down, the bias up, flat momentum. When I look at XLI, I've got a higher high, a lower low. That's not a trend. I've got bias that's up. I have a market that saw a bullish crossover right here. Do you see the 18-week to the green? It got over it, and now the market's making its higher high with it. That's important. Momentum up, not a trend, and the market, it's got bias up. When we take it the energy sector, downtrend still. Lower highs, lower lows. Staying under a Bollinger Band, only 5% of the time, so it crawled back here. Now, if the market wants to end this downtrend on a weekly basis, it's got to get over 31.65. That would break the pattern of lower highs, lower lows. If the market doesn't do that, the next support zone's 28.53. We did add this week on Friday, the Baker Hughes report came out. I believe we added 6 crude oil rigs. We had 12 last week, so now we're starting to add rigs. That means more oil coming on. We lost 1 natural gas rig, and momentum is sideways right here, locked in. I don't consider momentum overbought or oversold. I am starting to reconsider it, and I have to tell you that is embedding, and I think I've come up with a way by using a combination of this and the daily chart where it doesn't have to hit my Bollinger Bands and my other numbers for me to get my targets. I think I've got it figured out. I've been working on it for 6 months, and I think I'm there. In QQQ, I have a pattern of lower highs, and I left this on so you can see the lower lows. So the trend is down. Here I have the same problem as the charts we were just talking about. To get bullish, I have to get over 297.46, but then I'm right into the Bollinger top of 297.96. If you take a look, these markets don't like to stay over Bollinger Bands, so that becomes problematic. It's easier if the market wants to work down for support at 271.16, but I don't get bearish over and over the 18-week average when you're trading in the upper stratosphere of that. No, it could mean you can fall to it, but the two fight each other. In the emerging markets, any move over last week's high here of the 66.11 would give you higher lows and a higher high. Okay, but you're also going to be right into the upper Bollinger Band. What else do you see is a mess on this chart? You've got the 100, the 200, and the 18-week in this market sort of caught in there. I'll give it, the bias is up because you're over the 18-week. Momentum is flat, and I don't know what to do with the swing line. I've got a lower low, higher high. Let's put it this way. If the market's going to be bullish, the resistance should be 66.58. Right now, I think the bulls have better control than the bears, but I'm not going to call it bullish. Gold, this is a crucial number. You've worked down in GLD to the point where if you take out 177.10, you just keep the pattern of lower highs going and then a lower low. But we did something. We now have a pattern of higher lows and lower highs. Do you see that right here to that? Which way do we go? If you get back under 177.10 and close there on a weekly basis, you're bearish. Then you're under that number. You've got the swing line down. You have the momentum down. And at this point, well, that's the momentum, and the bias would be down. Don't do that and take out 181.17. You're then reinforcing the higher lows, higher highs. I take off these arrows, and I'm putting back into play potential of 191.66. You're at a real crucial area in this market. The gold miners are similar. They've been fighting for how long here at the 18-week average. Now, for those of you that do look at my daily charts, you know that you got up to the upper Bollinger Band one time this week and just let go to the downside. That gave me the idea of how to play with slow stochastics by a combination. That's one of the triggers that came over the past 6 months of looking at it. I think I figured out something to go back to the idea of an embedded slow stochastic reading on weekly charts. I for a while, because I got frustrated, I said they're either up, down, or sideways. I think I can go back to using them. My subscribers, I'll explain it to them, not completely to non-subscribers. And that means paying me. In the silver market, lower highs, lower lows. So we're in a corrective move to the downside, but we keep finding support where we should. Unfortunately, there's nothing on this chart that would make me say this whole week, oh, we're back to bullish. Unless you first took out this week's low that we're in and then came back up and closed the week higher and over this week's high. That could do it, but now I'm making up things because I'm into an outside week up that doesn't exist. So at this point, I'm looking for support right here at 22.28. I do think the long-term boys are in these markets. I think they're in the gold and the silver. They've had good leads. I gave them an out point recently. I hope they took it because these markets have backed off where I look pretty good on that. On TLT, you're down now to the lower Bollinger Band. That's where I think profits are being taken. So I realize how bearish the chart is, but do you really stay outside of the Bollinger Bands very much? Not so. So if you want to play for it, terrific. I think that you've got to wait and see. What I do think is the market is pricing in a Democratic win. And I think the market is saying, oh, with that, they're going to be able to sweep things and just spend, spend, spend. So the market is what? It's saying, well, that's going to cause interest rates. The market's reflating, if you will. This trade gets reversed very quickly if there is a Trump win. That's what I think. I'm not saying who's going to win. I'm just saying what I would think. I like the euro currency. I've been a bull. I like this market set up very nicely with these moving averages. Unless you got back under 109.98, I think this market has the potential to be headed up to that 114 level before things get said and done. In jets, the airlines, you know what they're betting on here. What do you think? Is it increased ridership? Maybe. I don't think so that much yet, especially with the outbreaks in Europe and America. Or is it money, free money coming at them as soon as the election's done? Doesn't matter which parties win what, that's coming. So this market's taking advantage of it. Higher lows, higher highs, but be very careful here. An upper Bollinger Band is just that. It's a resistance. Now, eventually, and this is the thing you have to watch, eventually this sideways action, which you're in again here, leads to a big trend. I am one that thinks eventually we get the COVID relief, and the longer we stay here, the more bullish I want to be. I'm probably wrong, but that's my thinking. In DBA, this is the ag fund. We've had the agriculture markets on fire as China just continues to buy. They're not in love with us to buy. There's nowhere else to buy it from until South America gets its crops. So they're buying, and that's why this market's been churning itself higher. You still have momentum up, bias up, trend up. To break the trend, you got to take out 1472. Barring that, I see no reason why you can't be up to that 1542, 1555 level. If you're a serious ETF trader, what I do is my package is the best way I think that you go with it. But let me tell you what it is. At 4 o'clock each day, which I've already done, I put out a SPDR ETF, and it gives you, I start off with the day's fundamentals for tomorrow. What American reports are coming out, or what big European reports are coming out, or Asian, that might affect trade. From there, we're going to take a look, and that's at 4 o'clock, at what we think you should do in the morning. Now, the beauty of this is I put out my futures video at 5:40 in the morning, because I want to get it to my subscribers that have these combo packages, because so many of the different ETFs are what? Based on what the futures markets are doing. If you don't know that, study what you're looking at. You'll see that that's often the case in them. I cover all this and more. As you see, I just added DBA. I've got the JETS on here, which we've put on. OUSA, now the high yields stocks are in there. So I'm putting different ones and coming on with more ideas for you. The way I do it is in sectors like this. And when I break them down, there's a scroll bar you pull on the bottom, and you can get to that sector just like that, so you can get to the markets you want. And I want your feedback. As a subscriber, you want other things covered. If I see there's enough volume in it and I have enough room to do it, I limit them at 40 charts. I'll take out a chart, I'll put in a chart. People seem to like me doing that, and I do it. On the weekend, I do a detailed, much more than you're getting here on my weekend edition, for the longer term traders. Buy here, sell there, here's the stop for the weekend I want you to use, here's where I want you to go with that. I cover all the charts you just saw there. Price, it's a little more than a Starbucks coffee. It's $8.95. Remember, there's a tip you're supposed to leave to the baristas, so not too bad. And you can give it a try. You're not committed to anything. If you want to stay with it, great. If you want to do a combo package, which a lot of people are doing, of my futures and this, you get both. You also get in the combination our free application, so that when I put out a video, it comes right to your iOS or your Android phone. You just hit it and the video plays. Pretty cool stuff. Go to our website under the word research, look at it, you can call us. My staff will pick up a phone. If they don't, I'll send them your voicemail. They'll call you right back. I'm Ira. Have a great weekend. Talk to everybody come Sunday. Take care.